Welcome to Stock Talk with Nico Kritikos. Today we're going to be going through Carnival Cruise Line stock, ticker CCL. This is a company that I started buying this past November. And as you can see here, I own 200 shares at an average cost of $19.87. And so Carnival Cruise Line is a $23 billion company. They are the largest cruise operator in the world. And they ended this past year with 50 ships in operation. And out of their 9 cruise brands, 8 of them have been returned to operations, and then they have one that's planned to return by this summer. And over when the pandemic hit, they shut down 19 ships, so they had to lower their capacity rate for the next couple of years. But what this did do was allow for them to be more efficient and more profitable. So that is the good part. Then the other thing that I discover when I was reading through the 10K is that if you are a shareholder of this company, you also get a credit to go on cruises. So if you own at least 100 shares, you get a $250 credit to go on one of their cruises, right? So if we get started, we can see with my checklist here, the first thing we're going to look for is if the stock is down. And yes, I would consider this a stock that has fallen enough because so before the pandemic, it was, up to $52 a share, right? Today, I don't think it's going to get back to those levels for a while. I think because they issued so many shares, it diluted it a lot. So what it will return to, though, is about a 30 to 35, probably about a $30 billion company, or maybe a little bit above that, maybe 32 or 33. And right now we're at a 23. So I would say there's about a 50% upside from where we're at today, 50 to 60% upside. Okay. And but more recently in the past year, last summer, it hit $31 a share. And now today we're at $20 a share. So I think anything below 20 is a good deal. If we look at their revenue and net income, we can see right here that revenue was growing prior to the pandemic, and it was $20 billion and $2.9 billion of net income, right? And that was improving. Then the pandemic hit and things got bad. This past year, 2021, they did $1.9 billion in revenue, right? Which was actually down from 2020, probably because they made money in the first quarter. But anyways, it was down, but their net loss is slowly improving, not by a lot, but it's slowly getting back to where it was. If we look at what analysts have them doing, we can see that. So a year ago, EPS was a negative $6. This year, it's expected to be negative $1.60 or so. And then the other positive thing is how they said the summer is normally when they're going to be the most profitable, make the most amount of money. And so that's why for this upcoming, not Q1 of 2022, but the summer quarter for this year, they are expected to report a profit, which is good. And then next year for 2023, looks like analysts have them doing $1.30 of EPS, so that's good. Revenue looks like it's going to return to pretty almost normal levels, but not quite where it was. So how I said the past year they did 1.7 billion in sales, and then this year they're expected to do 13.7 billion in sales, which is going to be up over 700%. Then the following year, they're going to grow another 51%, and it should be back to normal around that $20 billion mark of revenue. So I gave both of those a yes because they are slowly getting better. As far as the price to sales and price to earning metrics, I gave price to sales a yes because a 1.7 is very low and 700% revenue growth is huge. Then price to earnings, I gave a yes. This one could go either way because really, since they're unprofitable in this quarter, it would actually be a no, but since they're supposed to report a profit the following quarter, and then on a 2023 basis, they're only trading at 15 times earnings, which is very cheap, which means by 2023, within a year, this stock will be, I would say, a minimum of $30. I would say it'll be back $30 to $35 in about a year. So then we get to are they innovative? Do they have a moat? If they're innovative, that's up for you to decide. I would say they do have a moat, though, as far as being the world's largest cruise operator and all the ships that they own. That is not something that anybody can just walk into and spend billions of dollars to buy cruise ships. So that is definitely a moat there. Their other competitors are Royal Caribbean and Norwegian Cruise Lines, those are the two next biggest. And so those are the only ones that really compete with them on a serious level. As far as the industry goes, it looks like the cruise industry is expected to grow 16% per year for the next 4 years. That is strong. That's a good sign. Return on invested capital, once again, because they're in this weird stage now where they're getting things back to normal. They're trying to get, they had a bunch of debt on the balance sheet, which we're going to get to that. It's not good. They're trying to get all that debt off. They're trying to get rid of the ships well, they got rid of the ships that weren't as profitable. And then they added some new ships, and they're just trying to be more efficient with the business. So I think that return on invested capital number a year from now, maybe even less than a year, it'll be back to positive. It should be at least 10%. Margins, same thing. Margins are bad right now. They're negative, but they'll get better in a year from now. Cash flow looks really bad. End cash position, free cash flow, operating cash flow, they don't look good. Diverse revenue streams, this one could go either way. I put no because they really only make money from the cruise ship. So if they don't sell tickets for cruises, then they don't make any money, just like we saw in 2020, right? But at the same time, there's so many different things on the cruise ships for people to spend money on: food, drinks, games, music, whatever it is, water parks, whatever, they have a bunch of stuff on there, right? So in that sense, they do have diverse streams of revenue. They also sell millions of tickets, right? So that's good. But I would call this a business that I would say this business model only has one stream of revenue, and that's selling cruise tickets, and that's it. Balance sheet. They do have more assets and liabilities. What? Yeah. Wait a second. No, wait a second. Let's look at this. So here's the problem. If we go to the balance sheet, we can see here that although the equity is positive, okay, it has been shrinking. So look at, in the past, it's been over $20 billion of equity. November of 2021, so 6 months ago, it was 12 billion, right? Well, look at, over the past year, it's gone from 19, 17, 14, 12, 10. So it's been almost cut in half over the last year, which is really bad. So that one's going to get a yes. This one's going to get a no, number 13, because they do have negative. I mean, the price to book is cheap. It's only it's like a 2 right now, which is cheap, but that's because they have negative equity. So that one could go either way. Now this is a good one. Equity is much over 10% of the market cap. We just saw they had 10 billion in equity, and the company is only trading at a $23 billion valuation. So that's almost 50%. That's very high. Now here's the problem though. Equity has been decreasing how we saw. I would think that would get back to, a positive trajectory in the next couple months. I would think in the summer, especially when they start making more money, that should bring in a lot more cash, and then they could reduce the debt, and that should bring the equity up, right? Then we have strong share buyback. No, unfortunately, if we look at their number of shares here, we can see they used to pay a dividend too, right? I bought this stock first in February of 2020, and I got like $25 in dividends, and then the pandemic hit, they cut the dividend, and they have not resumed since. And I wouldn't want them to start paying a dividend again until they have that balance sheet figured out, right? But number of shares is up 5% on the year, not good. So that means even a year ago, they were still issuing more shares to raise money. So that's going to get a no. And then lastly, are insiders interested? Yes, there were 20 buys last month. This has not happened very often. Most companies I've been researching lately, there has not been a lot of insiders buying. So this one really stands out because looks like last month, right around when it hit $20 a share, 20 insider purchases. So that is big. That means that's a good thing. That's a very positive sign there, right? So all in all, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Only 10 out of 18 criteria were actually, one more. Is it founder-led, good management, or talented team? This one is also, I listened to the conference call. I like the management team. I like the fact that they sold all those ships, right? They almost had to. And they're making an effort to make the business model more efficient, more profitable, get rid of the junk, right? So I do like that. However, what I don't like about the management team is that the balance sheet should not be in the position that it's in right now. The equity should not have gone from 20 to 10 billion over the past year. That's not good. But I'll give them a pass. They have the biggest cruise company in the world. So I'm going to give that a yes. So all in all, we have what, 11 out of 18. Still is not considered a buy in my book, but even though I do own the stock, the reason I own the stock is because, like how I said, with a lot of these are going to flip as soon as they report that profitable quarter and as soon as equity goes back up. So, you know, this will turn into a yes, this will turn into a yes. That the number of shares they've been issuing, I don't think that's going to last. This is, once again, once they have cash coming in this summer, they won't need to issue shares to raise money. It won't be a problem. And then it would turn into a, once, you know, 4 or 5 of these turn into a yes, then it would be considered a buy. And same thing with return on capital, margins, cash flow, all those will turn to yes. So yeah, that is Carnival Cruise Line stock. And my price, I'm not a financial advisor, but my price prediction for this in 1 year is $30 a share. So thank you for watching, and I will see you in the next video.